Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Stock Market Recap, June 7th, 2025. And remember, folks, if you want to be able to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, the market ended the week on a blast to the upside, and the economy continues to produce enough jobs for all the folks that are looking for work. And the indices are headed toward their all-time highs, and let's see if they get there this coming week or if we have this little correction because of that big spending bill that is in front of the Senate right now. And our weekly stock analysis video, well, GE Vernova is a spinoff of General Electric and has over 7,000 or 75,000 employees. It's in wind, solar, and gas turbines, and the earnings are increasing at an accelerating rate. It's a new company, but it's been around for a while with 75,000 employees, but it looks like our kind of stock because it's just recently been spun off and is trading on its own. In our ETF video, wow, let's look at the housing industry and our top stock picks, which are up over 500% in the past 5 years. Now, housing stocks are lagging so far this year, but with the economy showing strength, it may be time to start buying those top 7 stocks in this industry. And when we look at the S&P 500, here we are. It looks like we've gone no place for the past month in here. But yesterday we hit this 6,000 level and it closed right at 6,000.4. So we're getting ready to maybe make a blast to the upside, and it's actually the old high is at 61.50, so we're about 150 points away. But we're looking at these bands getting closer and closer here. And when they get closer and closer, they kind of shoot off, the market shoots off one way or the other. Now, back in here, when we had the bands getting close, you could see they were getting close, the top band and the bottom band, and these are volatility bands. And then the market move was to the downside. But you could see how this 20-day moving average in here had been sloping down, so the strength was to the downside. Now over here, the 20-day moving average is moving up, so maybe, just maybe, we're going to blast out of here to the top. This indicator down here, which is our intermediate term indicator, is giving us no clue as to which way it wants to go. But let's look at the next slide. And when we look at this double top in here, and these are the stochastics, so these are the candlesticks of the S&P 500. When we see this double top in here, let's look at back here. Yeah, there was a big decline to the downside. This double top in here, yeah, there was a decline to the downside where it bounced around. How about these double tops in here? Yeah, we've always had a decline after these double tops. And yesterday really surprised us. We thought this double top was in effect, and the market was moving down. Then all of a sudden we got this surprise over this past week because more countries are coming to the table and making tariff plans or trading plans with our partners to get on a more equal basis with us and us with them. So that was looking positive this week. And of course the president talking to the president of China, and that was positive for the market. And the jobs report on Friday was also positive for the market. So that's why we got this jump in here. But we'll see, because now you can see that even though down here we made a higher high, this indicator is making a lower high. So that's what we're looking at in here. Any downward movement might give us a sell signal. And down, all the way down here, we can see that this intermediate term indicator, we could see it better than on the last chart, but is starting to slope down. And over here, let's take a close look at here. The green represents the market on the upside when it closes up for the day, and we can see that on Friday right in here, because I'm recording this Saturday morning. Right in here, this green line did not show heavy volume. In fact, it's shown lighter volume than it has during this week as far as the market closing on the up days. And these red lines represent the volume of the market when the market closes down for the day. And you can see they're high. The selling comes in very, very quickly when it does. So by not having high volume on Friday, getting close or hitting that 6,000 level up here, you can see that we're a little bit worried about that volume. So we'll see what happens this coming week, folks. And don't forget, right now the Senate wants to, or some of the people in the Senate want to break the big spending, beautiful bill, tax cuts and all, or extending the tax cuts, want to see that broken into two bills, which means it has to go back to the House if it does that, and we have to start all over again. And are they going to finish by July 4th? Boy, oh boy, we're talking about Congress here. I can't see that, but you never know. You never know what happens out there in the political world. So we're looking at this 6,000 level, and we're saying, oh my gosh, are we going to go up that other 150 points? And you can see that up here now, where that previous high was, right at the 6150 level. And are we going to go up there before we get turned down, or will we keep going? And this indicator up here is saying be careful, especially this coming week, and we'll see what happens. And portfolio protection, yeah, the SPY is actually at 599 in here, so this is a mistake. This was last week's SPY. So you can see between last week and this week, the SPY is up only 10 points, which is about 100 S&P 500 points, and it all happened yesterday with the S&P up 61 points on Friday alone. So that's kind of the difference between last week and this week, was pretty much Friday. And you can see that for about a $150,000 portfolio, we need three SPY puts to protect that portfolio, about 8 to 10% or 12% below the market. And we have one expiring in June, one put expiring in July, one put expiring in August, and we keep them spaced apart, and maybe this week we'll roll over the June into September. So we'll see how the market works this week. If it keeps going up, then we won't roll over until the following week, but that's what we keep an eye on. So within 2 weeks, we have to roll over anyway, and it may be this week. We want to see those highs hit, and then we get a better price or a cheaper price for our protection going out into September. So, folks, we had a tumultuous week this week. Everything is about trade tariffs. Everything is about that supposedly big, beautiful spending bill that has to pass the Senate, and they want to do it by July 4th. I'm talking about Congress. I'm talking about the Senate. And some people in the Senate want to break that bill into two, which means now both of those bills will have to go back to the House of Representatives. Both will have to pass, and then it goes to the Senate once again. How they're going to do that before July 4th, I don't see it happening, but you never can tell out there in political land. So, folks, you go out this weekend, got some more change in our pocket. Even the cover calls that we wrote were doing well, and some of them expired on Friday. So you go out this weekend, forget about the market, be with your family, be with your loved ones, take your minds off the market, go out for a walk, go out for a jog. And, folks, we'll see you back here in a couple of days.